So you're probably wondering, how the heck do I capitalize on this crypto and turn it into real estate? Hey, I'm Lauren Shepard. I'm a Los Angeles-based real estate broker. I've been in real estate for 10 years and I love looking for new opportunities to expand my business and help more and more home buyers. So today I want to tell you a little bit about how you can get a house with the crypto that you own today. There are two types of loans available in the marketplace. One is called a collateralized loan, and the second is non-collateralized. Let's talk first about collateralized. These are the standard type of loans that when you Google get a loan against my crypto, they pop up everywhere. Most of the time, they're 1 to 3 or 5 year loans, and you have to transfer your coin to a third party custodian to hold that crypto. You don't have access to it during the term of that loan. It can go up or down in value, but you don't have access to it. There is a loan product out right now that is specifically this type of loan, but it's for mortgages, meaning that it's over a 30-year term, which is more similar to how a standard mortgage is today. There's one company out there that's being talked about a lot. You might have heard their name. It's called Milo Credit. One of the biggest things is that you can't even use this loan product for your own personal residence. It has to be for an investment property. So if you're looking for a crypto mortgage that would be for your own personal residence, this product doesn't work. If you are interested in using it for an investment product to buy an investment property, then this actually is a pretty great product. And here's a few reasons why. Number one, they don't check your credit and they don't check your income. So you don't have to have tax returns. You don't have to have any type of credit. You're literally just qualifying for the loan based on the amount of crypto that you have and what the potential investment property will rent for. Some other pros. This is also a 30-year loan. So if you were to go get a standard mortgage for an investment property today, it would be a 30-year term. To get really into details, it's not quite your standard 30-year loan because the first 10 years of your loan are what's called interest only. So you're actually just making an interest only payment, which is great because the payment tends to be lower than if it were a standard 30-year fixed loan. You don't really need to know what that is. You just need to know that the payment would be less in that first 10 years because you're paying interest only. Then the next 20 years of that 30-year loan is that amortized payment. Some other benefits is that you can get up to 100% of your crypto value. So if you have $1 million in Bitcoin or ETH, you could get a loan for $1 million. You also don't have to come in with any sort of down payment. But the problem with it is that it is a collateralized loan. So you do have to transfer whatever amount of money that is that you're borrowing against into a third-party custodian account like Coinbase or what have it. And if for whatever reason, if the value of your coin goes down that's in that custodian account, then you have to add more coin to, or more crypto to make it equal and stay in line with whatever your loan amount was for. You do, however, have to pay in fiat cash some of the closing costs that would be associated with that home purchase, which would be anywhere from 0.5% to 2.5%, depending on where you live in the US. This product is available all over the US, which is great in any state. There is no loophole with this. So I had a client who said, well, I'm an NFT project owner. I have like $5 million. Can I just purchase an investment property through my NFT business and then lease from my NFT business? And that is a big no. There's no loophole in that sense. The renter of whatever property you're buying has to be at least arm's length away, which means, I mean, it's figurative. It means that you don't know them. The second type of loan, non-collateralized. This is something that I recently found. It's been available for 6 months and it hasn't gone away even with the tank in coin prices. So this is one of the only products I found that you can use to purchase your own personal residence with, which is super exciting. It's through American Financial Network. There's one lender out of Florida that I specifically work with, and he's been amazing in answering all these kinds of questions. He's already done these loans, and luckily he can do these loans all across the US. So how does it work? You can only use about 50% of your coin to qualify for a loan. You have $1 million in crypto, you can only get a $500,000 loan. The good news is you don't have to come in with a down payment. You can use that entire $500,000 to purchase a $500,000 home. You do still have to come in with that 0.5% to 2.5% in costs in regular fiat US dollar to pay for those buying expenses associated with the home. Again, this varies state to state. Some other qualifying factors: you have to have decent credit and you have to have at least 3 things reporting to your credit. So you either need to have a credit card or a car payment or something reporting to your credit. You don't have to have any sort of income other than your crypto balance, which is great. And to qualify for this loan, you also have to have enough crypto reserves to cover the loan times 2 plus whatever debts you have. So let's say you want to get a $500,000 loan. That means you have to have $1 million in crypto, but it also means that, let's say you have $2,000 in car payments and credit card payments every month, then you have to have 2,000 times 12 months. So another $24,000 in assets to cover that debt for the next 12 months. So I would highly recommend this for anyone who wants to purchase a house with their crypto. This is a really unique product and really exciting, and seems like it's going to be around for a while. So if you would like more information on that loan product, write in the comments, email me. My email is below. Now, let's say that you want some mix of these. These are kind of some creative solutions that I've kind of recommended to borrowers. A lot of people I've noticed, they aren't just crypto owners, they have a job. So they do have some income that they can qualify for a standard 30-year loan with. So let's say you can qualify for a $600,000 loan with a 10% down payment. Well, here in Los Angeles, $600,000 doesn't buy you much house. So maybe you need $900,000, right? But you don't want to liquidate your crypto because obviously that's a taxable event and you want to keep it in there to continue to grow. You can just collateralize that extra $300,000. So you can get your $600,000 standard mortgage, collateralize $300,000 worth of crypto, continue to watch that grow, but now you have a $300,000 US dollar down payment and you can now purchase a $900,000 house. And it puts way less of your crypto at risk. So those are my suggestions on buying a house with crypto. I hope you found this interesting. If you have any more questions, you can either comment down below or again, click the link to email me or fill out the form in the link below. I'm based here in Los Angeles, but I can help you connect you with a loan officer that can get you qualified anywhere across the US. And don't forget to subscribe for more Los Angeles real estate buying and selling tips.